The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, 11 o'clock until noon. Today being August the 14th, keep getting that wrong in my opening call. August the 14th, Wednesday. We're looking at a very interesting situation. And, of course, first of all, thank you, Steve, for a great 2 hours. Great lead into my show. It really helps. And, of course, I come on Wednesdays, 11 o'clock till noon. Larry Pesavento, 12 to 1. You've got, Daryl Martin, of course, comes on at 1 Eastern time. You've got, I'm just running through the day, I should know it by now, of course, Dave White. Dave White comes on at 2 o'clock. Dave White, Art of the Charts, a free webinar tonight. Wow, some nice picks there. US Steel. What a great move from the 70s to the 19s. Good pick, Gartley buy. And that's this evening. I think for $1 you can get on, and just wow, what an opportunity to at least test it out for a month. So go to the front page of TFNN, check it out. And we've got, then we've got Dave White. Oh, of course, 4 o'clock till 6. You've got Tom O'Brien. Tom will be the warm-up act for his following act, which will be the, I think it's 6:30, the webinar, teaching, explaining, answering questions about the art of the chart. Just check it out on the front page of TFNN. Dow's down 79 at 15,371. S&P's down 555 at 1688. Comp index is down 9 at 3674. Gold is up 11 at 1331. Silver is up 0.33 at 2168. Now, this is going to be very interesting. Crude oil is down a little bit at 106.20, but bonds are only up 430 seconds at 132 and 2430 seconds. The dollar is down 11 ticks after being up very nicely yesterday. This is going to be very interesting, and I'll explain what I'm talking about when I say very interesting, because it's always interesting. You know, I always talk about the market. I don't know how many years, decades, people have said to me, how do you every day, how do you do this stuff? I mean, charts. I've seen 6, 7 charts out every day. I've been doing this since the mid-1980s professionally. How do you do this stuff? I love it. I love the movement of the charts. I love the visuals. I love the, it's like when you're playing music, and I must say I'm really excited. I've been for the past few weeks, I've really been putting my time in back to playing the clarinet. Had kind of sloughed off, as they say. You know, when you're a professional and then you start playing professionally, to get that incentive is not, it's hard. You got to build that incentive yourself. So I've been building it up myself and starting to play chamber music, and it's just a lot of fun. In fact, I feel like I'm going back to that creative period when I used to back in the 1980s when I had my market letter. I was a professional musician. I used to do cartooning for the op-ed page of the Boston Globe. Periodically, you'd see, some newspapers, they have an op-ed page, and then they have little diagrams, little caricatures, or little illustrations of whatever is pertinent, that the letters that people write in, or the comments, the remarks that are made by the journalists who have columns, the columnists themselves. So I feel it's just sort of coming back now. It's exciting. So following the music notes, it's not unlike that. I just want to see where it's going. And there's a certain rhythm to the whole thing. Well, talking about rhythm, when we're looking at this chart that I'm showing right now, this is the S&P September futures, E-minis. When you look at that 1705 high, peak T-top, if you look at that vertical line, if you're looking at Tiger TV, I'll just quickly go there so I can see that you're looking at the same charts I am. You see that high at 1695.75, which was peak, alternate wave peak C? Well, Look how high the MACD, the moving average convergence, was. Look at this, the left side chart is the daily, the middle one, the big one here is 120-minute chart. Look at the stochastic up in the 95% area. Look what happened when it went to peak D. The MACD deflected lower, it couldn't even rally, and then it failed immediately. The slow stochastic rallied and then failed immediately. The on-balance volume made a peak F. Everything here said that there should be a sharp pullback. But there's one indicator that said to me, just be careful. Go through the motions the way you always do it, as professionally as you can. Use your Chapman wave methodology to identify what could be a potential top. Put on the trade. And once you've put on the trade, stay with the trade and let the market tell you what's going to happen. So let me just go through the scenario for what my subscribers are doing right now. We are long and we are short. This is the most short that I've been. I can't actually remember a time that I've been this short. I'm short in the newsletter sectors that were untouchable. I might be wrong, but I have to follow the technique. There was much greater weakness at that peak D. Now, that's a phantom wave peak D. This is what I teach in my Master Trader series. How do you use, in the futures especially, how do you use that phantom peak? Well, phantom peak A right here had a 25 cents difference between the two high bars. I wrote that in ages ago, a month ago. I said, is this going to be a phantom peak A? Well, I'm using it as a phantom peak A. Why? Let me just move this away for now. Because remember, the peak Ds are what we look for, and made a peak D in the 120-minute chart, 1694.50, pull back sharply. Now it's testing the 200-period moving average of 1685, which I told my subscribers. Let's watch this real closely. Let me do this and go one step at a time. In fact, that's what I will do. I'm going to go one step at a time. Still like to take your calls, of course. I do. But I'd like to do this, and over the coming 2 days, I'm going to try to give a much bigger picture of what I'm looking at. Because there's one indicator that said, be careful of the short positions that you take on. Because the way this particular tool has worked for me for years is differing. And I made a big deal about discussing the divergence between what it's doing right now, what the market's doing, the implications on the upside, and the implications on the downside. I'm going to get to that a little later on. I'm going to make a big note right here to talk about it. And hopefully someone in the den will remind me in about 20 to 30 minutes, because this is a very critical time in the market, is the 15,360 area going to hold? Is it going to test the 15,340s? Is it going to break 13,300s today? That is really important. Okay, so now let's go through this. In the Dow, that very long wick candle of yesterday, obliterating, it was like just a real cloud cover for the 2 bars before, said absolutely that a close above the high of yesterday, I would have to consider it to be very, very important and bullish enough to say that there could be a retest of the 15,000 high 500s, even the 15,600s. Okay. A close below, and I've got a left side, right side price time match, which came in yesterday with a slightly lower low. The day is young. If there is a lower low than yesterday, and it does it in this time period, I'd say the stochastic, which was in the 30%, 33% area, 35% area, should go down to under the 20s, and possibly in this move down, if I'm correct, go into the single-digit percentages. Okay. Now, I'm going to make a statement here that I believe very, very strongly in. When the tide changes, if you have the techniques and the tools to identify a tide change, all the techniques that you use in a bear market will come to bear. In a bull market, when the tide is going up, you can name any technique and it'll work. Why? Because the tide is going up. There's nothing to stop the prices from going up, because every time this dip, a higher wave comes to push it up. You can talk about Fibonacci expansions, which I happen to like, a certain couple of numbers that I really love. You can talk about round numbers. You can talk about the Chapman wave. You can talk about volume, unbalanced volume, fibs, anything you want. I don't care, Gartley's butterflies. You can talk about anything. If you're going up, every single technique will be met, if that's your technique to the upside, and the same on the downside. So now let's exclude all the techniques and just talk about price movement. There is only one moving average that will become really important as far as I'm concerned in the weekly chart of the Dow. And that is if on Friday the Dow is decisively under 15,300. If it's anywhere in the 15,250s, 220s or something like that, I'm going to then get, in my technique, a sell signal in the weekly chart. It'll be the first sell signal of consequence since the low bar of the week of the 21st of June, and that went only one bar further to the downside, and then it turned out and it gave brand new all-time highs to the Dow. Why am I making such a big deal about this? Because of this pattern here. I'm going to spend a lot more time on it over the coming 2 days. I just wanted to show it now, and then we're going to move on. You see that dashed line that I call the inside track Chapman wave methodology? Now, let me just, for those, maybe I'll do it, let me see. I'm going to check it out. Should I do it now, or should I do it a little later? No, I'm going to do it a little later. That inside track with the dashed line, the green line there, and the pink line right there that you can see it. It's a little faint, but you can see it. That tells me that once inside that area, you've got to be careful, because that's where you get your most obvious turnarounds to the downside. If it comes to the bottom, if there's an inside track to the bottom, that's where you will start to get a possible turnaround to the upside. Okay, so that's the weekly chart, and those are the parameters. And all I can say is I don't care what it is. If there are new highs established in the Dow and the S&P in the next 2 weeks, we're done with that correction, and we should accelerate much higher. And you've got the upside inside track target on the monthly chart of the Dow. Well, it depends when it is, but it's in the 16,100 to 200 area. Okay, so we've covered that, and I will go through some of the other techniques that I'm looking at and indices as soon as we get back from these very important messages here at TFNN. And if anyone in the den wants to throw out a chart or something that they'd like me to look at, certainly I will do it. Dow's down 71, S&P's down 5. S&P's much stronger than the Dow is the weakest link. I'll be right back.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces. And over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi everyone, Basil Chapman. I got a couple of requests in the den. I'm going to go to it. Actually, I want to, before I do anything else, I forgot about it yesterday. I had already. It always happens to me. I just get so carried away with the charts that I forget to look down at my notes. I wanted to show yesterday the IYT Transportation Index made a peak F top in the daily at 119.45. Let me just quickly, for there might be new listeners, peak F top in the Chapman wave. Let me show you this. If you just look at these bars, this is from my CD introducing the Chapman wave methodology, available at TFNN. If you look at that, it doesn't tell you very much. I developed a way of identifying each peak, essentially grading each peak and trough. And that's all you need to do. It's one of the simplest techniques you could ever wish to find in the very beginning. Look, there it is. A, B, C, D, pulls back, goes A, B, C, D, E, F. The wave goes to D, and then that's when you go to, it flashes a cautionary light. All you got to do is make your stops real tight. Suddenly it goes to E and F. A bell rings so loud it can make you deaf. What you're going to do, which way to go? You sell at the high and you buy at the low. That's the Chapman wave song. And look at this. Goes to D, pulls back a little, suddenly goes to E, and then F, 119.45. Peak E in the weekly chart, peak D in the monthly chart. This is the reason why I said I've got to, no matter what I'm thinking, I just have to follow my Chapman wave methodology. Because if I didn't do that, what is the point? If I'm listening to the news, it's supposed to obviate, to eliminate the noise. So look at this. This is a peak F. No other way I can count it. Right arm extension, rogue wave, peak F, plop, it comes back down. So IYT is, this may be because of the airlines. And look at the airlines. XAL, peak D top. What do you look for in the Chapman wave? At least a peak D top. It goes to 60.97 on the 60.9 on the 26th of July. Plop, it comes down. Weekly chart has made a peak E, and the monthly is in a potential leg E. There's no other way right now that I can count it, even though the MACD and stochastic are very good. So you can see why slowly but surely I'm building up a reservoir of negative charts, negative indicators. Look at the way the MACD deflected lower, the fast-moving average in the weekly chart. Look at this. We went short the stock this morning and got stopped out for I think it was a 2-point loss. It was a pity. Why? It made a round number, 97 high yesterday, and the all-time high is 97.29. Zillow. Well, I had to just do that. I should have made the stop above the high, but what, 92 to 9? I didn't do 5 point. I didn't do 7% on a quick risk, even though it was a small position. But there are so many stocks. Got an email a moment ago. Just look at LinkedIn, 24 round number high. Folks, use these techniques. There's a doji. There's a round number high in LinkedIn. A fantastic stock. Where has it gone? It's in either leg C or leg F. We won't know until or if LinkedIn really pulls back, and it pulls back and starts to fill the gap and goes from the 237 area where it is now to about the, I would say, to get a confirmation in the weekly of a peak, and leg D in the monthly, not until it breaks 212, the 9-period exponential moving average support. But at least it's telling you this is the area where you've got to watch it real closely, because there are signs, there are signals that it is possibly getting to some kind of a short-term peak. So the question of the den was why NDX? This is one of the favorites in the Investor Business Daily top 15, making a new high. It's recycled. That can only be called, at least for now, I have to call it a new brand new leg C. After an instant restart, Chapman Wave instant restart, looks great against the backdrop that we're looking at in the market. I'd have to be very impressed. So look, and it's recycled to a leg C up in the weekly. Yandex NV, Class A, Chinese Internet, leg D in the monthly. It looks to me like it wants to at least test the wick of this candle above 35.75, and right now it's at 34.74, 34.48. Up $1.28, so that's looking good. And away is one of those like TripAdvisor, I think, and it's doing very nicely. I don't like this nearly as much. I think this is doing very well. I think it's in a consolidation. It's at 3106 AWAY. If you're long, you can stay long. Start taking money off. It breaks under 29. The 29.10 to 28.50 area. Be very careful. If it doesn't hold that and treat that as a bounce-off area, be really careful. I think it's done for now. It needs a little time out, but it is acting quite well on a day like this. So then, and what was the other one here? Would I look at AG? Absolutely. Oh, and PAL. I think I've done PAL. Let me just have a quick look. PAL. Yes, PAL is a very interesting chart. I'll talk about it, and that's whatever it is. Palladium shares, and I will look at AG when we get back.
With over 3 decades of commodity trading experience, Andy Hecht has developed a system that combines both technicals and fundamentals. He calls this approach Technomental, and now you can put it to work for yourself with his brand new service, the Technomental Commodity Report. In this weekly newsletter, which comes out each Thursday morning, Andy gives you his analysis of the market price direction bias using fundamentals, and then specific trade recommendations including entry and exit points using technicals. The recommendations in the newsletter are always based on stocks and ETFs, so a futures account is not required, and Andy will often use options in the recommendations as well. Andy will tell you where to get in, where to get out, and he'll outline the risk-reward profile for all recommendations. To get your month-long free trial to the Technomental Commodity Report by Andy Hecht while locking in the low introductory rate, visit the front page of TFNN.com today. With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Folks, Dow's down 66, S&P's down 5. The S&P is only down 0.29%. Dow's down 0.43%. That's really interesting to me. Let's just have a quick look and see what the Qs are doing, because all that talk this morning with the talk about Apple and Icon being involved. Let's see. Yeah. There's a chance that we finally might have a peak D in the Qs, QQQ, having hit 77.27. Very, very interesting. Now, let me just go on with this. Oh, and by the way, I will be doing a Larry show today. I just got an email. I managed to organize things so that I got that free hour. So I'll be doing a Larry show today and tomorrow. It's going to be exciting, and we've got a lot going on. It's the close that's going to count today. Plus, I said that I would talk about a number of things, but one in particular, and I was waiting for, we've got about 5 minutes to go before I want to talk about it. So in the den, we had YNDX as a question. Wanted to look at that, and Away. And I said that Away is not nearly as positive as YNDX, which is looking very strong. This is Chinese. Now, Chinese stocks might be a little, just for the moment, might have a little independence. Now, the next question was PAL. Yes, PALL. PALL. Cub wanted to know about PALL. And that's palladium. ETFs, the physical palladium shares. Now, this is really going to get interesting. Let me just open this chart up. If you look at PALL, it's in a kind of a consolidation in the monthly chart, and it's palladium is PL, I believe. No, that's platinum. PA. I don't know if I've got it. I don't think I ever did it. No, I think there's a problem. I can't get the palladium continuous. I don't know what it is. Doesn't matter. Okay, so PALL is the next best thing that I've got. And there's a down-sloping resistance line in the monthly chart. And what's interesting about this is that, let me just go quickly here. You watch me. I'm putting the up arrow. Why? Because it's the most obvious lowest low bar. There's your peak A. There's your peak B, C, D, E. And always a plus sign above a D, plus sign above an E, unless it's a down arrow, because there's a down move, a sell signal going to sell mode. A, B, C, D, E. And on the way down, it's trough E. It goes to an ABC, pulls back, then rallies in a cup and a handle. Not one of my favorite patterns. It usually says it's going to rally further and then come right back into the cup. And what does it do? It goes D, E, F. It makes a top, pulls back, goes where? Back to that 200, that yellow line, that 200-period moving average. What a beautiful technical indicator that is. I've been emphasizing it here for what? How many years? Years. at least 5 out of my 10 years here. So it's really important. And it hits it again exactly right there in July and runs up to where? That strong downtrend line. All you need to do is learn how to take one line and turn it into a very powerful medium. That line is a resistance line. Let me make it nice and thick. Wait. There. That is a resistance line. What do you need to see? You need to see me draw the falling axe. Why? Because it looks like an axe. Look. Yeah, going all the way up. Look. There's the handle. There's the blade, expanding blade, pointing down like a cone, facing down. And what happens? All you need to see, if you're long, stay long. On some part of your position, I would put a little bit of a cautionary sign at 67.74 if it gets there. I'd say, okay, take something off. Why? Because it could make an H pattern that goes all the way back to test the 62 level. I don't think so. Right now, I think it's doing very well. It's at peak A, and over the next 3 days, 4 days, if it holds 71.10 area, I'm not saying 71.10 exactly that area, within a half a point or a point, and then powers over 73.50 for leg B, immediately, that's if it powers over 73.50, PALL, trading at 72.23 minus 0.09 right now, ETFS, physical palladium shares. If it goes over 73.50, then you could be looking at 75.52 area. Once again, I say area, because this pattern, that line is a strong magnet line. It's almost like the 200-period magnet line. And it'll have to go above it, come back, maybe try to retest it. That'll be support, and then it moves on. If the moment it breaks 75.52, have 77.20, the high of the week of the 8th of March, as your upside target, and then it's going to make a U-shaped cup-shaped pattern. The daily chart, pretty much, the reason why I wanted to spend time on that, daily chart is very much the same. There's the same falling X right there. It made a peak C1, C2. That's like a little mini sell signal. It pulled back quite sharply from the 72.5 to the 70 area, and now it's having a very choppy period. You do want to see that gap not be filled. Better not to go to the 70.89 area, but just somewhere in the 71, 40s, 50s, and then push to leg D right there. Now, what would that be? That would be an overlapping wave, a triple overlapping wave. I can tell you now that if PALL actually crosses the round number 73 high with this round number 72 low, if it powers through that 73, it'll be a very strong leg D, because it's got two. It's like an intersection where you've got your highway, this is the highway, and this is your access road coming up from one of the little suburbs coming onto the highway. As soon as it does that, it powers through. It should be a very strong move, but you've got to watch that 71 to 70 support right now. Okay, the next thing, I think there was one more. Oh, yeah, we did AG. I typed it into the den during the break. AG is, what the heck is AG? First Majestic Silver Core. It made a peak F in the Chapman wave, right there. Monster peak F up at 26.88 in April of 2011. It has a whole bunch of pullbacks, rallies and failures, and it starts to make lower lows and lower highs. So what is a bear phase? Lower lows and lower highs. Can it turn that around? Right now is the first opportunity to start seeing in the monthly chart higher highs and higher lows. We'll see. We're not even going to talk about it. But in the weekly chart, you can talk about it. The week is not finished. You have to go through to Friday at 4 o'clock. But so far, it's a very nice leg B up above the 200 period moving average, which was such strong. They couldn't even get there. And then it broke down from the peak D high in the weekly chart at 24.20 back in week of November the 9th and of 2012. Plunges all the way down to $6.61. So this is this is more than a double in just a couple of weeks. This is an amazing move to the upside. Very impressive. And today's very impressive. I've got this as leg E/B. Now, funnily enough, the 200 period moving average was unbelievable resistance. I'm sorry, it was support, and then it became unbelievable resistance. Once it broke on the 16th of January of this year, it broke 1929. And what did it do? It made the cup form, it made the H formation right at the bottom. It made a lower low, close lower, and in that case, all it says is, if you're going to have a powerful move to the upside, you've got to get a buy signal that goes quickly to a buy mode to make the 9-period moving average support. It did that, went to a peak D at 1397 on the 24th of July, pulls back to a little doji candle, 1135 on the 7th of August. Now it's running up. This might be a brand new move to the upside. All I would say is if you are long, stay long. I would add to it on any pullback. It's at 1434. Wow, what a move today. It's up 9.38%. Any pullback into the 1350 to the 1305 area, I would consider at that point assessing to say, do I want to add to this position? I would not want to get out of it right now. I think this is a turn of consequence, having taken out that really strong gap to the downside back in March, was it? Back in April the 19th. So, hope that helps you. Now we've got Dave in Boston. Hi, Dave. How are you?
Basil, how are you doing today?
Very well, thank you.
Hey, listen, I want to talk to you. I've been talking to you about the GDX and Nugget, and I jumped into Nugget yesterday at the close at 727.
Nice.
And it's already up 827. But the key thing is the GDX broke through that July 23rd level of 2835.
Correct.
And I'm looking at the candle of June 3rd at 30, like 50. Do you think that's the next target, or should I cut my position here? What would you suggest?
Okay, let me just do this for everyone. I want to just quickly do the 120-minute chart on the GDX, which is the Market Vectors Gold Miners ETF, trading at 28.55, up at $1.35. I have a feeling that what we're looking at here, boy, I could be wrong about this because I have no evidence whatsoever. It is just, when I say a feeling, basically what I'm saying is, with the experience I have in this area, history has shown that certain things must suddenly come to the forefront after being in the background. And that is the reason why gold might be moving right now is that we are going to find out in the next couple of weeks that there is something going on that is making gold itself, regardless of the oversold situation, gold is becoming, in a small way, but in a very important sector, maybe it's Switzerland, I have no idea, a currency of fear. Now, I didn't think that would happen, and there is no reason for me to even think it could happen because I don't know anything that's going on in the bank sector, because that's really where basically that's what you'd be looking for. If there's going to be fear, it's because something's going on with the banks. I just don't know. But what I can tell you is that the chances are that we are looking at, actually, you know what, this ties in with something else. Let me answer your question real quickly so that I can get to the next point. It has to do with the volatility index. Here we go. The answer is, in the 120-minute chart, this is, let me just have something here. Got it. In the 120-minute chart, if in the next 120-minute bar, the high of 28.69 is not taken out, it will be peak C in the 120-minute chart, and that will leave you at least a leg D, but the MACD is strongest, the stochastic's at about 77%, so that's a little bit of a divergence. Be a little bit careful. That's number one. Number two, it is now above the 23rd, the high, as you mentioned, the high of the 23rd, around about 28.31. That's a very big positive because it's already closed. What was the close in that last bar? Close at 28.49. So it's already closed in one of the bars above that high. That's another positive. It is way above the 9-period moving average. I have one little technique that says be a little careful because we could get to D and then have a bit of a pullback by later this afternoon or tomorrow. But at this point, it's only saying a bit of a pullback, and that is because one of the moving averages is above the 9-period moving average, and that's when it did it before, that's when you got that pullback. So I'm going to say to you two things. Because you've got the so are you talking about the NUGT as the trade or the GDX as the trade that you're worried about?
I'm in the nugget, the NUGT.
Okay, so the NUGT is basically trading off the GDX, and correct. The NUGT is the direction daily gold miners 3 times bull in gold, and the gold shares. And what you got to consider, go to the front page of TFNN, folks, if you want to learn about these direction shares, about any of these shares that are 2 and 3 times the root, 200%, 300%, it's very important. I like what I'm seeing. I'm going to ask you to do this. You don't have to do it right this minute because I suspect we're still going to go to leg D. But in your position of NUGT, because it's such a huge gain, I mean, if you could keep doing this, knowing that you're going to miss a couple of times, but with the majority of the times you're going to get a really nice trade, I think that that's a very good a way to do this. Now, someone in the den just said KJS. I think it's leg D, and I think he's right. I was about to do this and I forgot. 641, thank you. I got to go for those Ds, and I have to do it so carefully. I was talking at the same time. I saw it, and then I ignored it. We're in leg D. Thank you, KJS in the den. So I'm going to make the suggestion that I still see. I want to put it together with a GDX because that's the root. Oops, GDX. Give me 1 second here.
Yeah.
GDX. Because there was the same bar in GDX, and no. That's why I ignored it, because I thought the GDX at 15:30, that is 3:30 in the afternoon, on the 8th, went to 2609, and then went, it's there. I missed it. Boy, I thought I was getting really good at the white background charts, because the black background charts I could tell to the penny. I am getting better, but not good enough. Okay, thank you for asking that question, and thank you, KJS, for forcing me. Yeah, you got to take credit. This is leg D in the 120-minute chart. So I'm going to do a quick analysis. I'm going to give you your answer, and then I'm going to talk about this index, the one tool that is really important right now, and it'll tie in a little bit of what we're looking at. So I'm going to suggest consider taking a little bit off now, and when we get back, I'll give you a better plan on how I think you can trade this. I'll be right back.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed down a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, the Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi everyone, Basil Chapman, Tiger Editions. Our NUGT is up 14%, 14.33%. That is the direction daily gold miners 3 times bull. We're on with Dave in Boston, and this is going to be very interesting. I'm going to make the suggestion that just in terms of money management, you take a little bit off. But I like what's going on so far, but my guess is that there will be some kind of a pullback. I'd like you to try to keep some position here, because I think this market is going to close horribly. That's just my guess. And what I'm thinking of here is that if you use between $8.10 and $7.96, you might be giving up too much percentage-wise. But that if it starts to close underneath 810, which is the 9-period moving average in the 15-minute chart in your GT, that's going to suggest to me that it'll give back at least half the gains of today. So I would recommend you taking off something now. You can take the whole thing off. It's just a great trade. You've got a fabulous trade. But because I don't have the signal yet to say that it's going to drop, I'm just preparing that it could later on. I'll be doing Larry's show. Maybe in the next hour it will be doing that. But right now, I say take a little bit off, and then I would have a trading stop in the moment that it goes above 836. If it does that, I would raise it as a trading stop. So now, right now, 823, that's a 17 cent. I'd have that 17 cents trading stop on that part of the position. My thinking is that it'd be a great opportunity just to take your profits. You can keep just a little bit on if you want, just more as an experiment. But I think that you're building a really good eye, Dave, for going in and getting out. And I think that that's going to serve you really well, because it looks to me like the gold and gold stocks are going to be the fabulous trading vehicles at least for this interim period. So hope that helps you.
Very much so, Basil. Thank you very much for your input. I'm going to take your advice.
Thank you very much. And I will be doing more on the golds and silver when I do Larry's show straight after this. Now, quickly, folks, what I'm going to do here is I'm going to do this. The volatility index. Let me just talk about it. And it speaks a little bit to the relationship that I'm talking about right now, between what's happening in gold, and if you look at the XLF just for a moment, you see the XLF is holding, it is pulling back, there's nothing really there. I don't have any signs that there's going to be a bank problem, but I'm looking at the gold and I'm saying, hey, wait a minute. If I'm correct in my assessment that the volatility index is actually going to only get going if and when the Dow breaks into the 15,200s, and even the short-term trading index is ignoring everything right now, that allows a lot of room for the volatility index to get to the 15s and 16s, thereby pushing this market down a lot. So what I'm going to be doing right now is I'm going to be monitoring how the volatility index over the next hour, actually it's really between 2 o'clock and 240, that is going to be really important to see how the VIX is doing. Is this divergence between the S&P only at 0.44% down and the Dow is at 0.62? Is that going to be an issue? You know what? All my work says, oh, got questions in the den. GG, ABX, NEM are the top GDX holdings. I will look at that in the next hour when I do Larry's show. In the meantime, let me just say in my opening call, this is the most short we have been. I just don't even remember when was the last time we were this short. Now, it is not. I'm not doing it as a statement to say that we're going down to 5,000 in the Dow. I don't even care where we go to. I wanted in the Chapman wave to get into the position that says peak F in the S&P. That's where you go short. We did short. We did it twice. The third time we got it right. We should have almost the exact top tick in the S&P. We should have the exact top tick in two sectors, but we don't know if it's going to be the top tick if it gets taken out. But I had to do the work, and let's just see what happens. I'll be right back for the next hour doing the Larry Pesavento's show. Go to my front page of TFNN and check out my opening call. You get 2 weeks free. I'll be right back for the next hour.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.